Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Russian economy, and specifically to talk about the Russian ruble. Now, immediately following Russia's invasion of Ukraine, President Putin came out and stated that all unfriendly nations, so basically any countries that were applying sanctions against Russia, had to pay for future purchases in rubles, not US dollars or euros. And the reason that he did that is because he wanted the ruble to become established as the second biggest currency in the world behind the dollar. He was trying to establish the ruble as another petrocurrency. He wanted countries that were buying and trading with Russia to be using rubles. However, unfortunately, from President Putin's perspective, over the course of the last 2 years, that hasn't happened because countries such as China and India don't want to deal in rubles. They've stated that they're not prepared to do that trade in rubles. They want to do it in their own currency. And what we've seen over the last 2 years is that the ruble is now becoming marginalized even within Russia. So in today's video, we'll look at some data which shows which are the most commonly used currencies in the world. We'll have a look dating back to 2010, see what the changes have been, and then we'll talk about what's happened over the last 12 months and the rise of the Chinese yuan rather than the Russian ruble. We'll then have a look at what's been going on with regards to the trade between Russia and China, how that's increased during 2023, and what payments are being made in terms of the currencies. We'll then have a look at some really interesting information in terms of the level of yuan debt that is being taken on by Russian companies. Because they're being paid in Chinese yuan, they're now wanting to match their debt to all of their income. So the borrowing in yuan has started to rise rapidly in Russia over the last year or so. And that's now causing problems for Russian companies because the cost of that borrowing has started to skyrocket. We'll then have a look at what the exchange rate has been doing between the ruble and the yuan, and also what's going on with regards to the value of the ruble against other major currencies. And then finally today, I'll wrap up with my summary as to what's going on with the Russian ruble and whether or not it's now becoming a dead currency, even in Russia. But before we get started on all of that, I'd like to say once again, thank you so much to everybody that's supporting the channel. If you've bought me a coffee or sent me a YouTube super thanks, thank you so much for taking the time and effort to do that. I really appreciate every single one of those payments. And if you've signed up as a patron or a member, then you're providing me with long-term support, which helps to keep me posting more videos on the channel. So thank you so much for that. This chart shows the daily turnover of global foreign exchange markets for the major currencies dating back to 2001. And the values shown here are in billions of US dollars. And this data shows us a number of really interesting things. Back in 2001, the volume of trades on the international forex markets was $1.2 trillion. And out of that figure, US dollar trades equated to $1.1 trillion. So the US dollar represented 90% of all transactions that were being made in the foreign exchange markets. The next most traded currency was the euro with $470 billion, followed by the Japanese yen, the British pound, the Swiss franc, the Canadian dollar, the Australian dollar, Swedish krona, the Singapore dollar, the South Korean won, and probably most interestingly of all here, back in 2001, there was no registered trade being done in the Chinese yuan. If we now jump forward and look at the statistics for 2022, so 21 years later, you can see that the total volume of trades being done in the international markets had risen to $7.5 trillion, which represents an increase in the level of daily trades of more than 6 times over that period. The level of trades involving the US dollar had increased from 1.1 trillion to 6.6 trillion, and interestingly still represented more than 88% of all of the currency being traded. The next most traded currency was the euro, followed by the Japanese yen and the British pound. But interestingly, in 2022, the Chinese yuan was the 5th most traded currency in the world, which reflects the growing importance of China as a trading partner. The next most traded currency was the Aussie dollar, followed by the Canadian dollar, the Swiss franc, the Hong Kong dollar, the Singapore dollar, the Swedish krona, and the South Korean won. And if we now have a look at this chart, which shows the most used currencies for global trade finance between 2019 and September 2023, it shows a really interesting trend. And just to note here, the scale on the left-hand side here shows the percentage of global trade, but it's been truncated. The bottom section shows the percentages between 0 and 8%. We've then got a lightning bolt, which indicates that we've cut down the middle section of the chart, and the top section shows the percentages between 84 and 92%. And the reason that this has been done is because the US dollar is still by far the most dominant currency in the world in terms of being used for global trade finance. So if we had a scale from 0 to 100 on the left-hand side, the two other lines on this chart would both be plotted at a very low level, and it'd be difficult to actually see what was happening. So we've truncated the left-hand side so that you get a feel as to what the trend is. So we start off by looking at the US dollar. You can see that back in January 2019, the dollar equated to around 85% of all global trade. And between the start of 2019 and the middle of 2022, the level of trade using the dollar actually increased to around 87%. However, since the middle of 2022, there has been a slight reduction, and the current level is sitting at around 84%, which obviously means that out of every 100 trades that are made globally, 84 of them are paid for using US dollars. If we now have a look at the other two lines on this chart, the blue line shows the level of trades using the euro, and the orange line shows the level of trades using the Chinese yuan. And as you can see, over the last 5 years, there has been a narrowing between these two lines, and actually in September 2023, the level of trades using Chinese yuan was 5.8% compared with 5.4% for the euro, and that's the first time that the Chinese yuan has become the second most traded currency in the world. Obviously, there is still a huge gap between the level of trade in US dollars and Chinese yuan, but you can see very clearly that since the start of 2022, there has been a rapid increase in the usage of the yuan. And one of the reasons for that is because the trade that Russia is doing with China, which represents the biggest portion of all of Russia's trade, is being paid for predominantly in Chinese yuan. So that's obviously now driving up the percentage of trade that's being done using the Chinese currency. And this is really one of the reasons that I wanted to make this video today, to show that Russia is actually helping China in terms of improving its position in the global markets at the expense of the Russian ruble. Chinese customs data for 2023 confirmed that two-way trade with Russia hit a record $240 billion last year as the two countries pushed for closer economic ties, despite the war in Ukraine. The level of trade between China and Russia grew by 26.3% in 2023 compared with the level in 2022, and Chinese shipments to Russia jumped by 46.9% and soared 64.2% compared with the figures for 2021. Chinese imports from Russia also rose by 13% in 2023, with half of Russia's oil and petroleum exports being shipped directly to China. And this chart, which shows Russia's 5 largest trading partners in January 2024, really highlights the amount of exposure that Russia now has to Chinese buyers. The scale on the left-hand side of this chart is shown in billions of euros, and the colour coding here relates to different fossil fuels that Russia is exporting. The blue section relates to crude oil, so oil in its natural form. The red section, oil products, which are basically refined oil products such as gasoline, diesel and kerosene. The orange section is pipeline gas. We then have a light brown section, predominantly for the EU, showing liquefied natural gas, and the black section at the top is coal. And what this chart shows is that in January, China purchased around 7.5 billion euros worth of fossil fuels, which equates to around $8.3 billion. And the vast majority of those purchases were crude oil. There was some oil products, but a very small amount, some pipeline gas and some coal. But the biggest thing that China is buying from Russia is oil. And when you look at the other 4 countries shown here, Turkey, India, the European Union, which obviously isn't a country, but it's a collection of 27 countries, and Brazil, the amount that China is purchasing from Russia still equates to around 50% of all of Russia's sales. So Russia is now entirely dependent on that trading relationship with China. If China's purchases were to disappear, then Russia would be in a severely difficult situation because it wouldn't be able to keep producing the level of crude oil that it is right now because it doesn't have anywhere to store it. It needs to keep shipping that oil directly to China. And as a result of this relationship, Russia has now become dependent on the Chinese yuan because China refuses to do any trade in Russian rubles. It will only make payments in Chinese yuan, which means that the companies that are now dealing with China have lots of Chinese yuan. And as a result of that, they're now starting to take on debt in Russia that's denominated in Chinese yuan because it makes sense from an exchange risk perspective to match your debt against the currency that you're being paid in, because you then don't have to worry about any movements in the currency between Chinese yuan and rubles. If you're being paid in yuan and your debt is in yuan and you're making your interest and repayments in yuan, then everything is matched. And that's what's happening in Russia now. And that's now starting to cause problems for companies in Russia and the Russian economy. So as we've just discussed, Russian companies, in order to match off their exchange rate risks, want to start borrowing in Chinese yuan. So over the last 18 to 20 months, there has been a huge increase in the amount of debt that Russian banks are providing to Russian companies in Russia that's denominated in Chinese yuan. This chart, which has been put together using data provided by the Bank of Russia, shows the total amount of loans taken by Russian companies that are denominated in Chinese yuan. And these are loans that are being made in Russia. And the scale on the right-hand side of this chart is shown in billions of dollars and goes from 0 at the bottom to 60 billion at the top. And what this shows is that in January 2023, there were around $10 billion worth of loans made in Chinese yuan. However, as you can see, between January 23 and January 24, there was a consistent and steady increase in the amount of debt being borrowed in Chinese yuan. And by January 2024, the figure had got up to around $45 billion, which represents an increase of over 4 times during that period. Now, if you follow the channel, you'll know that there are problems going on in the Chinese economy. And as a result of that, interest rates are relatively low in China right now. The government is actually trying to encourage people to spend because the economy is suffering from deflation. Prices are actually falling. So opposite to what we've seen for the rest of the world over the last 2 years, we've got a government that's now trying to add stimulus to the economy to get people spending, to increase demand, to try to increase prices. So now is actually a good time to be borrowing in Chinese yuan if you're based in China. But it isn't a good time to be borrowing in Chinese yuan if you're based in Russia, because Russian banks need to match off all of their Chinese yuan liabilities with actual volume of Chinese yuan. They're needing to buy it in the international markets. And what we are now seeing is an increase in the cost of all of this borrowing in Russia. So borrowing in yuan is now becoming quite expensive. And this chart highlights the difference in the borrowing cost in Chinese yuan in Russia versus China. The scale on the right-hand side of this chart is shown as a percentage and goes from 0 at the bottom to 5% at the top. The red line at the bottom shows the yield on a Chinese government bond of 1 year. The blue line shows the yield on a 5-year Chinese government bond. The yellow line shows the yield on a 10-year Chinese government bond. And the black line shows the yield on a Russian corporate yuan bond, so a bond that's issued in Russia. And this basically is the borrowing cost that companies are having to pay in order to access this Chinese yuan debt. And what this chart shows is that during the course of 2023, borrowing costs in China have remained low. They started the year somewhere between 2 and 3% and ended the year somewhere between 2 and 2.5%. However, if you look at the black line, which shows the cost in Russia, it shows that over the last 12 months, the borrowing cost of yuan has risen from around 4% to almost 6%, and it is still rising. And that's as a result of the fact that there's continued demand and the banks are constantly having to fund more and more yuan. So Russia is now becoming more dependent on both yuan as a currency and also as a form of debt. As more trade is now being done and paid for in Chinese yuan, the demand for Chinese yuan is increasing. And of course, simple economics tells us that when the demand for something increases, it generally results in an increase in the price. And that's what we've seen over the course of the last 12 months. The value of the yuan has been rising, and the value of the ruble, which is falling in terms of the demand, has been falling. This chart shows the movement in the exchange rate between the Chinese yuan and the Russian ruble over the last 12 months. And as you can see, this time last year, one Chinese yuan was trading for around 10.9 Russian rubles. However, today, one Chinese yuan equates to around 12.6 Russian rubles, and that represents a fall in value of the ruble of 13.5% over the last 12 months. And for a major currency like the ruble, that is an absolute disaster. A fall of more than 10% represents a crash. And what this shows is that demand is continuing to fall for the ruble. Nobody wants to deal in it. And this chart shows the movement in the exchange rate between the US dollar and the Russian ruble over the same period. And you can see that this time last year, one US dollar was trading for around 75 Russian rubles. Today, it's trading for 90, which represents a fall in the value of the ruble of almost 17% in the last 12 months. Once again, that is not good news from Russia's point of view and indicates that nobody wants to deal in the ruble. So what's the summary and conclusion today? Well, I wanted to post this video because I think what's happening with regards to currency in Russia is really fascinating. At the start of the war in Ukraine, President Putin set out his intentions to make the ruble one of the biggest currencies in the world. He was trying to force countries who were dealing with Russia to pay in rubles, which would drive up the demand for rubles and therefore the value of the currency. And he wanted it to be a competitor to the US dollar, to try to bite into that 90% of the global market that the US dollar dominates. But unfortunately, what we've seen over the last 2 years is that Russia has had to turn to India and China as its main trading partners. And unfortunately, from Russia's point of view, neither of those two countries wanted to play ball. They didn't want to make payments in rubles. They didn't want to be receiving lots of rubles for things that they were exporting to Russia. And as a result of that, Russia didn't really have any choice but to make the trades in the other currencies, in Chinese yuan, and to start with Indian rupees, but now a lot of that trade is being done in the United Arab Emirates dirhams because Russia didn't want to build up huge amounts of rupees that it couldn't do anything with. And as a result of those dynamics, we have seen the value of the ruble crater over the last 18 months. And that's despite the efforts of the Russian central bank, who've been buying rubles in the international markets, and also the capital controls that President Putin introduced, whereby a lot of the exporters in Russia are forced to bring currency back to Russia and then exchange it into rubles. But as we've seen in today's video, one of the ways that Russian companies are finding a way around that is by taking on debt in Chinese yuan, and they then have a justification for bringing yuan back into the country and using that to pay their interest and their repayments. So they don't have to convert all of that into rubles because they're using it at source. They need it in order to satisfy all of their obligations. So what we've seen over the last 2 years is a growth in the value and also the level of trade being done in the Chinese yuan. So Russia, by trying to establish the ruble as one of the big currencies in the world, has actually shot itself in the foot. What it's done is by increasing the amount of trade it's done with China and paying for all of that trade in yuan, it's increased the profile of the yuan, and the yuan recently overtook the euro, as we saw in the chart earlier, as the second most traded currency in the world. Now, the US dollar is still entirely dominant. It still represents around 84% of all of that global trade. So we're not seeing the dollar falling away anytime soon. But what we are seeing is the Chinese yuan rising in prominence. And as that continues to rise, it's likely that the ruble will continue to become less and less attractive. And as the value of the ruble has fallen so significantly over the last 18 months, companies in Russia don't want to be holding it because you don't want to be sitting with a currency that's constantly devaluing. We've seen that in countries such as Turkey and Argentina. And what that tends to do is drive up inflation because the cost of all of your imports become more and more expensive as your value falls. And that's what we're seeing in Russia right now. We've seen inflation rising over the last 6 months. Now, the Russian central bank are trying to get on top of that. They've increased interest rates to 16%. But obviously, when you do that, it has knock-on implications. And the cost of borrowing in Russia is now prohibitively high. So that's going to reduce the appetite from companies to take on debt, to invest into their businesses, to grow. And it also means that consumers are less likely to want to take personal loans as well. And what we've seen recently is a number of initiatives being announced by President Putin, whereby he's having to subsidize mortgages to encourage consumers to take on the debt to move house. So the state is now having to fund all of these different initiatives, and that's going to put even more pressure on the Russian central bank and the Russian economy at a time when it needs to be releasing pressure. It needs to be bringing in more revenue and trying to get people spending. So the overall summary of today's video is that what we've seen over the last 2 years is that Russia has tried to promote the ruble. It tried to put it forward as a competitor to the US dollar. That initiative did not work because its two main trading partners, China and India, refused to deal in rubles. And China has now become the country with the second most traded currency in the world. So we've seen the rise of the yuan and the fall of the ruble. And the use of the Chinese yuan within Russia is rising on a daily basis. And there is a very real possibility that the ruble could well become a dead currency. Nobody will want to deal in it apart from Russia itself. So hopefully you found today's video useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end. And here's something to put a smile on your face.